What is going on, guys? It is Ahmed, and I am back today with yet another video for you all. And what I want to talk about today, guys, with everybody is which regulators are shaping US crypto policy. This has been a hot topic since the beginning of 2022. Now, remember, I always like to preface by saying that I'm not a financial advisor, but rather, I always try to put you guys on the plays that I'm in. So before we dive in, make sure you guys ignore all comments saying contact me on WhatsApp, because those are guys just trying to take your money and your hard-earned wealth. So this article I thought actually summed up things really, really well. So I'll link it in the description below if you want to go through all the details. But what I want to talk about is all the entities that have to do with the regulation when it comes to crypto here in the United States. So shout out to cryptobriefing.com posting this article about 3 hours ago, because I think this is, again, really important for all investors to at least be educated and understand what goes into regulating our favorite asset class, which is crypto. So they start off by talking about the key crypto regulators in the United States. So you guys could see for a long time as crypto has existed, enthusiasts like myself and probably you all and onlookers alike have pondered how regulators will deal with the asset class. It's become a more pertinent question as the space has grown and regulators worldwide have made it clear that they are watching the space. One thing that we do know, with the growth of crypto and all the dangers that come with investing in this space, especially all the malicious activity that does occur, we do need some sort of, maybe not, I know people don't really like the word regulation, but we need some kind of oversight to ensure people are safe overall. So again, if you go in and look at the key regulators here in the United States, first and foremost, the SEC, or the Securities and Exchange Commission. And again, for those of you who are wondering what the SEC is, the Securities and Exchange Commission plays one of the most active roles in the U.S. crypto regulation. It is formed back in 1934 to prevent fraud connected to the sale of securities or financial contracts. So one big thing here, for example, when it comes to the stock market, is we start worrying about things like insider trading. When it comes to crypto, there really is no such thing. So the SEC, again, that is kind of their role in all of this. If you guys continue forward in the article, it talks about the Commodities Future Trading Commission. So the Commodities Future Trading Commission is a U.S. government agency that regulates financial derivatives, is the key word here. It enforces rules pertaining to the trading of financial contracts, including futures, options, and swaps for assets such as commodities, securities, bonds, and cryptocurrencies. Back in 2015, the CFTC, or the Commodities Futures Trading Commission, found cryptocurrencies such as Bitcoin to be commodities subject to oversight under its authority. The agency took regulatory oversight of exchanges offering American citizens future or options contracts on crypto assets like Bitcoin and Ethereum. That actually led to a pretty big influx of investors thereafter. The Office of the Comptroller of the Currency. So the Office of the Comptroller of the Currency is the primary regulator entity supervising the operations of national banks and federal savings associations in the U.S. for cryptocurrencies, and the OCC determines how banks can use crypto assets in custody holdings and on balance sheets. Also play a really big role. Federal Deposit Insurance Corporation. While putting regular dollar-pegged stablecoins to work can earn investors higher interest than traditional savings accounts, stablecoins carry more risk than real dollar deposits due to their lack of government-backed insurance. We know with Crypto.com that's something they've actively been working on because they have one of the biggest staking platforms globally, and they allow now FDIC insurance with stablecoin staking. So you guys can see here the FDIC is the regulatory agency responsible for providing insurance to U.S. bank deposits up to $250,000 per depositor. Last year, the FDIC said it would be studying the deposit insurance for stablecoins, USDC, USDT, DAI, and things alike. The feds, probably the most bashed on group of individuals, although their work is nothing short of difficult. The Federal Reserves, aka the Feds, aka you guys might know Jerome Powell. The Federal Reserve in the is the United States central bank and is responsible for leading the country's monetary policy. That's no easy task with such a beat-up economy from the first place. It is the main entity printing the supply of all dollars, notes, and circulation in the United States economy. The organization manages the country's payment infrastructure and developed an automated clearinghouse system in the 1970s that offers an electronic alternative to paper checks. The thing with the US that we need to really understand is, again, we are a service economy. We are not a manufacturing economy. Go over to China, that's what you call manufacturing economy. So for us, it's based off the service industry. And I think, again, that's something that is affecting the longevity and success of the economy, unfortunately. We need to start pushing more towards creating, right, manufacturing, again, having assets. But the problem is really, it's services. So again, the feds have been dealing with inflation, rising inflation rates and things alike, and it's been rough for sure. But now they're tasked to figure out a way to combat the 7.2% inflation that we are currently seeing in the current markets and here in the United States. The U.S. Department of Treasury also has a really big role when it comes to crypto regulation and creating crypto policy. So, as you guys can see here, while the U.S. Department of Treasury is not a regulatory agency, it has a crucial role to play in determining how crypto assets will be regulated. That's because it's the executive department responsible for managing the federal government's treasury. One role of the Treasury, department is deliberating with policymakers over the impact of crypto assets on American monetary, economic and tax policy. So when you bring it all together, people are like, oh, it's the SEC, it's the Federal Reserve. No, these entities, right? The Biden administration has to be in contact with all of these different financial entities, the U.S. Department of Treasury, the Federal Reserve, the FDIC, right? The Federal Deposit Insurance Corporation, Office of the Comptroller of the Currency, a lot of different Commodities Futures Trading Commission, the CFTC, SEC, alphabet soup, right? All of these different entities have to come together to make the final decision that we're expecting next week. So the future of U.S. crypto regulation. And this is the part I feel like has been very sensitive to the market. And we just want to get it over with, right? It's like ripping off a Band-Aid. It has to happen. Take the Band-Aid off and let us keep going. After last year's market rally, there is little doubt that crypto has entered the mainstream. With that, regulators worldwide are paying close attention to the space. Besides Bitcoin, the proliferation of DeFi and stablecoins has also become a hot topic among regulatory agencies. The US, the SEC, CFTC, all the alphabets, if you will, Federal Reserve, and the Treasury Department have all begun to monitor the space and weigh in on crypto policy. As digital assets continue to grow, it's likely that US agencies will take a more active role in regulating the space. And we've seen it in different countries. Look at India, right? Imposing a tax on crypto. Because at first they said we want to ban it, but now they're saying, no, we want to regulate it. And then they started saying we'll regulate it by adding a tax that hopefully helps our financial system as a whole. So when it comes to the US, I think the big thing that they're focused on is stablecoins. Once we have clear direction on exactly what it is that they want to do, right? Ban being the furthest thing from what they're looking to do, then I think we will start to see the influx of investors coming back into the space and the damage that has been done hopefully cleared out of the way. Bitcoin is down over $27,000 from its all-time high. Ethereum down almost 50% from its all-time high. Everything is hurting. Even the fun tokens like Dogecoin and Shiba Inu, my personal favorite being SHIB, are hurting. We want answers, and I think the answers will be coming next week. I appreciate you guys' support. Make sure you smash that like button. Consider subscribing to the channel. And until next time then, keep investing. Peace.